Hello and welcome to Tishi Dilko. Sadi Cup. Thanks so much for watching and all the support, comments, likes, shares. We really appreciate it. Today we're going to be talking about Canadian income taxes. What do you need to know specifically coming from overseas and filing Canadian income tax for the first time? Given the time of year, taxes are coming due at the end of April, so this is well timed, especially if you're working towards filling out your first income tax return.
subscribe ให้พวกเราด้วยนะคะ
So let's take a look at what you need to know with Canadian income taxes. First of all, what are they? Why should you file a return? And what are the basic steps you have to take specifically to file your first return and get it correctly? Before we get into that, make sure to hit the like button, subscribe to our channel, and turn on notifications so you don't miss a video from us. So you first might be thinking to yourself, what are income taxes and why do you have to pay them? Well, income tax is just that simple. It's a tax on income you've earned within Canada. Canada is a country with a lot of things that are publicly funded through taxes. Healthcare, our education system, primary school, high school, these types of things are all paid for through taxes in the country, and income tax being a component of the taxes that fund these programs. So if you are in Canada, whether it's a newcomer, working as a temporary worker, you're even a student, maybe you have scholarship income, these types of things, the same is true for you as it is for Canadians. Even if you have very little or no income, it is good to file an income tax return every year you are in Canada, because there are a number of benefits you may receive back, even if you aren't making a huge income. And we'll get into that a little more specifically. Anyone who works as an employee in Canada, their employer will generally deduct taxes from every paycheck. At the end of the year, these taxes that the employer collects are submitted to the government as the income tax payments. So for instance, income tax season has started in Canada. So any employee who worked throughout 2022, the income they earned and all the tax their employer deducted has been reported to the federal government, and now it's time for Canadians to file their 2022 return. It's always early in the following year for the previous year. This allows you to note your income down, file it with the federal government via the Canada Revenue Agency, or CRA, and they're the ones who manage all the income tax collection and benefits distributed across the country. So a big thing to know as a new Canadian, especially if you're in Canada earning income, the general rule when you consider yourself a tax resident of Canada, which means that you do have the tax benefit and also owe taxes potentially to our federal government, is if you earned 90% or more of your income within Canada in a given year. This is the rule that states that therefore you do have to file Canadian income tax. So as a new worker in Canada, when you start at any employer, they will give you what's known as a T1 form. And this form generally outlines different things that you might be claiming as expenses at year-end time when you do your income tax return. These things are like, say you are working and going to school. You can have an education amount. You can have, if you have dependents like children, you can have certain tax credits, benefits for those. Generally speaking, most people who, are just working, they don't have any extra expenses like education or children, they have a T1 form and it's just listed the basic personal amount. And this is the amount you can earn in Canada that is tax-free. So you'd still want to report and file an income tax return the following year, but any income you earn up to a certain amount in Canada, and specific to each province, they have their basic personal amounts, will not be taxed. So any tax your employer collects and your income at year end is under that amount will be given back to you. This is what's known as a tax refund. So you filled out your T1, you began working, you've worked throughout the year. So each paycheck you get throughout the year from your employer, you'll notice your gross salary, or your gross wage or payment on your paycheck. This is the amount you earn before any tax deductions. So the three most common deductions you will see from our government in Canada are income tax, EI or employment insurance, and CPP or Canada Pension Plan. These are all taxes in Canada that you are required to pay and your employer is required to collect. So regardless if you know your income is going to be under a certain amount, generally employers will still collect it and you'll get it back at year end. So this is one big thing to know, is that at year end, when you file your return, or the start of the next year when you file your return, if you have paid too much tax throughout the year based on your income levels, you will get that back as a tax refund. It will be a check or a direct deposit from the federal government into your bank account. Now, this isn't any extra income in terms of the refund. This is you have been overtaxed throughout the year and you are getting it back. Now, the opposite is also true. Throughout the year, if you don't pay enough tax based on your income, you'll have to actually owe tax. Typically with people working for an employer, this situation doesn't really occur. This is more for those who are self-employed or running their own business and don't necessarily pay taxes every paycheck throughout the year. So we won't get into specifics there now, but there are a number of scenarios, different forms you might have to fill out if you have different working conditions, etc. Today we're focusing mainly on typical employees within Canada. So the three main government deductions I mentioned: income tax, EI, CPP. Income tax is both income tax collected from the federal government and each provincial government. It generally shows up as one item on your paycheck as a deduction, but these amounts, the federal government amount, are all based on your income levels. The percentage that they take is based on the amount you earn. Provincially, it works the same. However, the rates in each province are a little bit different. So depending on what province you live in, you might see larger deductions from someone in, Manitoba versus Alberta, but it all works generally the same. It's based on income levels. And in Canada, generally, as you make more income, the higher the rate of tax they take back. But this is also a bracketed system. So for instance, if you were earning $50,000 a year and then started earning 60, there are tax brackets. So from, 0 to a certain amount might be a certain percentage, and then that next amount might be taxed at a higher percentage. That is called the marginal taxation rate in Canada, and that's pretty much how it works all across the country. For EI, employment insurance, well, this is another tax in Canada, and what it does is it funds our employment insurance program. Just like taxes in Canada fund everything from healthcare to education to various social programs, various kids' sports programs, these types of things, employment insurance is something that we all pay as employees that safeguard if we were ever to be laid off from our employment, that we can actually collect part of our income from the government in order to, sustain ourselves, pay our rent, pay our groceries while we're looking for a new job. So that is what the employment insurance EI deduction specifically is for. The third one is the Canada Pension Plan. And the Canada Pension Plan, or CPP, is something that the Canadian government has had in place for a number of years. Every Canadian employee pays into, and it acts as a retirement fund for when anyone in the country turns 65 and can start getting this money back from the government. Now, you might be wondering, as a temporary worker in Canada coming here, why do you have to pay this? Well, this is just part of our tax system. Though that money is for, long-term retirement, you're still funding our tax system short-term, and you are getting the benefits like our healthcare, like our education in the short term, even if you don't plan to stay here long-term. So there really is no way of avoiding it. It is a requirement from the federal government, and it's just a required tax that everyone working in the country pays. In terms of the rates for CPP and EI, the rates in Canada are set annually by the federal government. I believe for 2022, the rate of EI was 1.58% based on your earnings for that paycheck. and for CPP, it was 5.7%. For 2023, those both went up slightly. So, while your total Canadian income tax will vary by province, because the provincial tax rates may be different across provinces, CPP and EI is the same for everyone across the country because they're both federally set taxes. So these ones, regardless of where you are, they're based on those percentages for the year for the income you make. So the only difference is if you make more, you'll pay more. Both of them have a set maximum amount. So if you are earning more throughout the year, if you reach a certain point in EI or CPP, your employer will stop collecting those because once you hit the maximum you can contribute, you won't be required to pay anymore for that year. Just to recap, what we just went through is the very basic income tax situations for employees in Canada. This would include if you're a part-time employee going to school, a full-time temporary worker, things like this. We're not getting into, the specifics of every situation. So carrying on with that idea, we'll tell you the basic things you need to know to file your income tax. So as an employee or a part-time, worker, student, who may be doing an internship of some kind, what are the things you need to look for in the new year in order to file your taxes for last year? Around this time, your employer or your educational institution will send you the appropriate tax forms you need to file your taxes. As an employee, the most standard form you would receive is called a T4, and this is a Statement of Employment Earnings. So these will list where you were employed, your name, address, your social insurance number, and basically all your income and your deductions. So if you have one employer, you would receive one T4. If you have 3 employers, you would receive 3 T4s. Each employer is required to provide you a T4 in order to file your income tax. The only real difference with an educational institution, if you are here going to school, you will likely get a T4A, especially if there is any sort of scholarship income, internship income, stuff like this that you are earning as a result of being here for school or studies of some kind. T4As are statements of other income that don't necessarily fit a general box or scenario. So with those 2 basic income forms, a T4 and a T4A, you can essentially start filing your return. As people who've been here for a number of years paying taxes, most of us file our income tax online, or a number of people use their personal accountant, a business accountant, or a number of tax filing services across the country. But if you are going to file yourself, the most important thing to know for first-time filers is that you actually don't have the option of filing online. You have to file your first claim by mail. So if you are going down the road to file income tax yourself, the best place to visit is cra.gc.ca. And this is the Government of Canada Revenue Agency website. And this website will have any and every form you may or may not even need to fill your taxes yourself. And generally, all the forms come with guides that help walk you through. So when you want to start, what you need to do is on that Canada Revenue Agency website, simply search in there the year you're filing for. So it's 2023 now. Search 2022, the province you are in, and income tax package. So for instance, if I was going to file in Saskatchewan, I would search on the Canada Revenue Agency website, 2022 Saskatchewan Income Tax Package. And this will generate the PDFs you need that you'll be able to download and fill out and then print. The only other specific thing to mention where you might need forms if you have specific situations, one of them being education. So there is a separate form for education and claiming educational expenses like tuition credits and textbooks, etc., and filling out forms for your specific circumstances, whether it be education, child dependence, or even elderly dependence if you're taking care of an older family member. All these forms, just by searching within the Government of Canada CRA website, they're all pretty straightforward, and again, most of them come with the guides you need to walk you through. Now, one of the biggest reasons to even care about this and make sure you file a return is because, number one, If you've paid too much tax throughout the year or have a lot of, special circumstances like dependents, education, etc., these all act as tax credits for you. Tax credits either give you money directly back or reduce the amount of tax you would be required to pay. And what this means is that it generally results in a larger tax refund and getting this money back from the government. And this is great news because, you had to pay it throughout the year, and the government's recognizing you overfunded the tax system and then sending it back. And other activities throughout the year, for instance, a number of provinces have different extra benefits. For instance, there's a Saskatchewan active families tax credit. So if you have kids enrolled in activities, you can earn a tax credit back for paying out of pocket to enroll your kids in those types of activities. So this is why it's good, because there's a number of situations which can increase your return, or if you do owe money, minimize the amount you might owe to the government in tax. So once you get all your forms filled out, printed off, and mailed to the Canada Revenue Agency, generally for your the first time filing, things can take a little longer. Expect, a minimum of 2 weeks, but probably more like a month to 6 weeks for a mailed first time return. But after that, at some point, you will get your check back in the mail. There's also, the ability to create a CRA My account with a social insurance number, email, login, password. And this will actually allow you to go in, set things up, and you can register your financial institution, your bank, in order to receive direct deposits. So rather than waiting for a paper check in the mail, the government, once it processes your return, any money back will come back into your account directly from the federal government. Once you do it once by paper, everything can be done online through the tax software of your choice. There are a number of free options available or very low cost options, and everything is kind of managed through CRA My account. So I'm the first one to tell you that tax information might be very, very boring. It might be something that is kind of a struggle to pay attention to, but it is really important in Canada, especially with all the benefits that can come with filing your taxes and knowing how to file them properly. I know we went over the basics today. We could spend probably 4 hours talking about every scenario in Canada. But we wanted to give you just the basics, especially since it is tax time and you might be getting ready to file your income tax. If you do have more specific questions or comments, please let us know in the comment section below, or shoot us an email at tideofcanada@gmail.com, and we'll discuss how we might be able to help you further. Thanks so much for watching. We really enjoyed giving you this content today. Please share this with any friends who might be in need of this information. Thanks again for all your support. Thank you for watching. Sadi Kap, have a good day.